This is the Asia Trade. I'm Annabelle Droulers in Hong Kong.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are facing early headwinds as Wall Street's great rotation trade takes a break with signs of economic weakness overshadowing optimism about Fed rate cuts. Pressure is mounting on Joe Biden to step aside. Donald Trump set to deliver his first public address since surviving the assassination attempt. And China's twice-a-decade political summit closes with few signs of major steps to boost demand or to rescue the property sector.
Haidi, taking a look at how US futures are coming online this morning. Just some very modest gains out of the gate here. But you think about what happened on the intraday session, because it was pretty much a couple of days where pretty much tech was in the red. Then we went to everything sort of closing lower. Pretty much every single major group in the S&P 500 in negative territory. Hard to say really what drove that sell-off in particular, but some of the analysts that we've spoken to have been pointing to things like that recent rotation we've seen into broader markets. Some of those names are now looking a little bit overbought and, as a result, a little bit vulnerable to consolidation. Dollar was fractionally high. We saw Treasury yields as well climbing just a few basis points. But let's flip the board, take a look at where the action was in after hours today, because we saw Netflix posting some blockbuster numbers, and actually Haidi as well checking what's happening in Sydney futures.
Yeah, looking perhaps a little bit muted as we head into the end of the week, right? This is a picture, Bell, when it comes to the ASX, the 51 futures there showing a little bit of downside as we get into the last week. Of course, this is a market that has been trading close or at one point at a fresh record high this week, so perhaps taking a little bit of money off the table, given that there were also some concerns over the very robust jobs numbers that we had yesterday, that the labour market numbers kind of puts more pressure on that first quarter CPI reading. This is kind of a make or break catalyst as to whether we see the further firming of bets that the RBA will have to hike again. So that's Sydney for you. Chicago Nikkei futures looking a little bit more positive after, of course, we saw really big tech, chip-related names like Tokyo Electron leading the chip sell-off and the broader sort of market lower in the previous session. We're a little bit more positive, particularly when it comes to Japan trading. Not so much for China, some weakness there when it comes to A50 China futures as we wrap up the third plenum. As expected, or as sort of not expected, no big policy announcements there, but we could potentially hear more of a trickling down of specific economic support policies over the next few days and into the next week or not. Dollar China holding pretty steady at this point. But of course, so much of this is still coming down to the focus on US politics, and the pressure is continuing to build on Joe Biden to drop his re-election bid following reports that the former President Barack Obama, the former House Speaker Nancy Pelosi have been discussing his exit with allies. Let's bring Bloomberg's political news director Jody Schneider, who is still with us out of Milwaukee as we head into the end of this week. And Jody, there's been so much increasing pressure, and of course all of that has been exacerbated by President Biden's comments about only sort of a medical condition would force him out of the re-election campaign, and then being diagnosed by COVID. What are we hearing now?
Yeah, there is a lot of pressure building. It feels like it truly is intensifying, Heidi. At this point, we are hearing that there's all kinds of reports about private meetings the president has had where people have said he should seriously consider dropping out of the race. We've heard about these reports from Hakeem Jeffries and Chuck Schumer, Nancy Pelosi. And then today, the Washington Post reported that Barack Obama, with whom Biden served as his vice president and who he seeks the opinion of often, that Barack Obama, according to the Washington Post, had said he had told allies that he doesn't think that Joe Biden can win this race, and he should seriously consider whether he drops out. And then we've also heard there's been reporting in the New York Times that President Biden, for the first time, is thinking about whether he can win this race, and if so, if he can't, may consider an exit. So this pressure does seem to be intensifying. The reports are swirling. The president is self-isolating with COVID at his home in Delaware. He's said to have a mild case. We heard from his doctor today that he, has a cold, has a runny nose, mild symptoms, is taking Pavlovis, and he also is expected to recover soon. There is some speculation that if he was to make a decision to exit, he would likely not do so, from his Delaware home, but would perhaps return to Washington and make a speech. But this is all speculation at this point. Yet you can sort of see the split screen effect, if you will, while the former President Trump, who tonight will give his acceptance speech, we assume to rousing endorsement by his supporters in the arena here at the convention hall, we have the other side with Joe Biden self-isolating in Delaware.
So, Jody, if it's a matter of when, not if, do we have any sense of how much more time Biden has left to make that announcement? And also, if it is being ceded to Kamala Harris, who also comes in to support her as VP then in that case?
Yeah, of course, this has been the big parlor game in Washington and here in Milwaukee and everywhere in the U.S. Journalists in particular love to play this game of who would be, if it was Kamala Harris, who would be the VP? If it wasn't Kamala Harris, what would be the ticket? But we really don't know at this point. The first thing is Joe Biden has to be convinced to leave the race. That pressure is intensifying, but he has not said, we have never heard him say that he would leave. So if he first has to be convinced to leave, and then the question is, if it's not Kamala Harris, what's the ticket? It gets much more complicated if it is not Kamala Harris, and if it went to it really is a matter of, would they be able to come up with a ticket? Or would they go to an open convention in Chicago? The Democrats meet there starting very soon, in just a few weeks, on August 19th. So that's another possibility. It gets somewhat complicated if it is not Kamala Harris who's on the ticket, but there still are 4 more months to go before the election, and the people who are really pushing the president to get out of the race now are hoping that if they could salvage the ticket, could come up with a viable ticket, that they could try to beat the former President Trump. But a lot of people feel at this point, and the polling is even worse than it was several days ago, that if Joe Biden stays in the race, the fear is that they would not only lose the presidency, but control of the House and the Senate would be very, very hard for the Democrats to win as well, those down ballot races.
Jody, as this sort of storm continues to play out for the Democrats, we've seen almost uncharacteristic restraint from former President Trump, right? But we are going to hear from him tonight as the culmination of the RNC really leads to his formal acceptance of his nomination.
Yes, so we will hear from him tonight. We expect him to give a very a speech that is kind of red meat for his allies there, his supporters who are in the arena, who've been very vocal. They've been a really good crowd, as we say. Last night for J.D. Vance, they cheered. They broke into cheers often in the speech, and we expect that from President Trump tonight, especially since that assassination attempt on him just days ago. The news cycle is moving so fast, we forget that was just Saturday, and here we are, it's Thursday. But we expect him to, for it to be a very, very enthusiastic reception for him. Whether or not he mentions Joe Biden, at this point, the speculation is he doesn't necessarily want Joe Biden to leave the race, especially since the former president is polling so much ahead of the current president in much of the country, and including some swing states, including most of the swing states at this point, and some other states that one wouldn't have thought would be in play, like Minnesota, New Hampshire, even Maine, we saw in one poll today. So it's unclear whether he's going to mention him much, except, of course, as J.D. Vance, the vice presidential nominee, did last night, to denigrate his policies. That you can expect that he will continue to do.
That was Bloomberg's political news director, Jody Schneider there. And you can also turn to your Bloomberg for more on the Republican National Convention. Go to TLive Go to get commentary and analysis from Bloomberg's expert editors. We'll have special coverage of that event later today. Meanwhile, moving to China now, because President Xi Jinping has vowed to make high-quality development the guiding force of the economy. That's as the third plenum wrapped up with few signs of big bang stimulus plans. Our China correspondent Min Min Lo joins us in Hong Kong. And Min Min, typically we get a bit more information that's released in the week following the third plenum, but what do we know about the outcomes so far?
Yeah, first of all, I want to say that President Xi, it's his third term in power presiding over the third plenum, so we were expecting more consistency, more stability, and that's exactly what we got. The communique from Xinhua was very long but very vaguely worded, full of jargons like modern socialist country and Chinese-style modernization, but I'll try to pass through it and give you a summary. So what we know so far is China will continue to rely on advanced manufacturing to boost growth. So really trying to move up that tech value chain and strengthen their resilience amid these growing pressure and trade restrictions from the West. But this could mean that China will prioritize high-quality growth over absolute growth. So this could mean that maybe that bar for short-term stimulus could be higher because China may be willing to tolerate a slower growth as they try to rebalance this economy. We were looking out specifically for more demand-side policies, for measures to stimulate that very lackluster domestic demand. So there was mention about improving domestic demand in the context of a short-term task for the government. They said they are still committed to meeting that economic policy for the year. We know that's not an issue. They are already on track to meet that growth target of around 5%. We're looking for property measures that was mentioned just once in the context of diffusing risks. So again, reading between the tea leaves here, I don't know, does that mean that that stimulus will not be forthcoming? It's hard to say. There were also mentions of tax and fiscal reforms. No details given, but that suggests perhaps the government is looking at addressing that heavy local government debt and maybe shifting some of that burden to the central government. And there was also mention of improving social safety net, having more employment-first policies, improving health and medical care. So these are measures that could perhaps help boost people's confidence in their ability to spend again. One thing I want to point out was a once popular phrase that was missing from the document, which is that markets will play a decisive role. That wasn't mentioned, and instead it's saying that officials need to both let go but also control the market. So perhaps, again, some ambiguity there and perhaps a signal that maybe there will be more of a government hand in the economy, and we already see signs of that with the PBOC, preparing to maybe intervene more in the financial markets.
We also saw some developments when it comes to the ousting of the ex-foreign minister, Qin Gang, from the elite party body. That part perhaps not so surprising, but he stays within the party itself. So what does that tell us about, I guess, the severity of his fate?
Yeah, it's quite nuanced here. So Qin Gang had resigned from the Central Committee, which had accepted his resignation. He is still described as a comrade of the party and stays as a member. So that suggests that perhaps he faces a less severe fate compared to the former Defense Minister Li Shangfu, who was ousted from the party, and the Central Committee had just confirmed his removal from the party altogether, and that was on corruption charges. The Central Committee also confirmed the removal of two former members of the Rocket Force, a commander and a chief of staff, and this was part of an ongoing corruption investigation that's been going on for a couple of years now. So again, no official reason given for why Qin Gang had resigned, but it does suggest that whatever sin or crime he has committed is less severe than that of the former Defense Minister Li Shangfu.
Our China correspondent Min Min Lo there, wrapping up the third plenum for us. We're still ahead on the Asia trade. We'll be speaking to Yuanta Securities on whether US markets can bounce back following what's been a week-long decline in those mega-cap tech stocks. Market insights are next. This is Bloomberg.
Taking a look at how shares of Netflix are faring in after hours, we have seen it actually moving higher, but today, or right now, fairly steady. The earnings or the numbers from Netflix, very interesting ones, because we saw really blockbuster ones or numbers for the second quarter. 8 million subscribers being added. That was versus the 4.9 million estimate. So that's a 65% jump high from what Wall Street had been expecting. But it's the guidance for the third quarter that came in on the lighter side, and that does seem to be really capping those gains in late trade. But let's get more on this and also take a look at the outlook for big tech in general. Let's bring in Daniel Yu, Head of Global Asset Allocation at Yuanta Securities, joining us now from Seoul. And Daniel, let's just kick off with Netflix and what that tells you about the broader trend around tech earnings.
Yes, if you look at the numbers, it's clearly coming in very strongly. A lot of the headwinds are coming in terms of the political issues and the antitrust issues for the large caps. But if you look at the numbers that are coming from the Netflix, you are seeing a significant growth rate still coming, and it is continue to grow at two-digit growth rate for most of these big tech names, including the Netflix. If you look at the subscriber numbers, as you said, it's about 60% higher than expected. Actually, it's growing year-on-year number of about over 30%. That's phenomenal numbers if you compare it to any other growth industries. So we do think that the large caps, the tech names, the Magnificent Seven, all are expected to show significant growth rate in terms of top line as well as the bottom line that is much higher than most of the S&P 500 estimation or even any other countries per se.
Daniel, it's been a pretty bad week, though, for big tech in general, because we've seen so much selling pressure coming through, particularly in those names that are more sensitive or related around semiconductors.
Right.
Do you see, and if I bring up the question of the day, how long before the big tech sell-off hits 10%? Do you see that eventuality at all? And would you be buying as well on that dip?
Yes. If you look at the semiconductor, if you ask me about any conviction buys, we do think that the semiconductor industry perspective are looking very attractive over the next 2 years period. We had seen about 1 year plus alpha, about 1.5 years of growth rising of the semiconductor industries, including NVIDIA and even Asian names like TSMC and SK Hynix, etc. We think that the semiconductor industry is rising on not just the DRAM side, but also the AI-related chip sector. So we think that that is expected to be there. We did see SMH, which is the ETF of 25 large cap semiconductor companies, falling by more than 11.7% over the recent few days because of the Trump's talk about how they might charge insurance fee for Taiwan. In any case, we think that the growth rate is there because of the AI cycle. And if you expand that to large caps, including the Amazon and Google's and all, etc., the large caps, we did see stock price falling somewhere between 2 to 5%. We think that that is quite reasonable. We think that it falls by, as you said, 10%. That's extremely attractive buy territories. You're looking at earnings growth rate of over 25% year on year for next 1 year for these large cap versus the 14% growth rate for the S&P 500. So we think that there's still room for growth and also stronger stock prices movement over the next 12 months.
And Daniel, when it comes to international opportunities,
I'm sorry, can you repeat that question again?
Daniel, I do wonder whether you see more compelling opportunities. Maybe this is a time to diversify a little bit away from the US market, but I know that perhaps in Asia the focus for you is still on these tech-heavy gauges.
Right. I think that, we did see some of the spreading out of the investment to like Russell 2000, which is these SMEs of the U.S. And also we did see some of the interest rising for the Asian stocks because we think that the interest rates are coming down from the U.S. But if you look at the speed of that interest rate cut, we don't think that it's going to be very aggressive ones. It will be a very gradual one over the next 1 to 2 years. we might see about 4 times to maximum of 6 times rate cut, which is only 1.5%. If that's the case, yes, we will see a dollar weakening a bit, but not that much. So I guess it's a question of how much you want to expand out from the large cap to small cap and also the Asian country stocks. We think that it should be a gradual process. As the U.S. interest rate cut happens, if one cut happens, then you expand by about 5%, another cut, another 5%, etc. We think that that should be a gradual process of moving out of the large cap to the small cap or the Asian country stocks.
And like many investors, there's sort of a greater appreciation of geopolitical risk as we get towards the US election, right? But when it comes to the potential impact on chip-related names, it could be a bipartisan issue. So what are you most cautious on in terms of potentially more severe restrictions on those that have exposure in markets, involving China?
Right. I think that you got to look at as the what U.S. wants. U.S. obviously wants to have a very strong power in related to the AI sector and the IT sector. So they will continue to put pressure on providing, moving within to the country of U.S. For the productions and various other issues. So we think that though, in order to do that, we continue to have TSMC, and also we need, I guess, SK Hynix as well as the Samsung Electronics. So we think that the value chain is there as long as the market share is remaining very high for U.S. companies. We think that using the Asian countries would be quite reasonable. However, though, in terms of expanding out to China, I think that might be limited. So we got to look at as an overall valuation of the market share. We do think that, though, some of these countries within Asia are looking quite attractive on the basis of what U.S. wants. So we think that we should be looking at that way rather than just avoid the Chinese stocks or avoid any Asian stock because of geopolitical issues. We think that U.S. cannot continue to have number one position in AI businesses without some of these companies within Asia, including Korea and Taiwan and also Japan.
We have seen that markets really hit this week Japan because of this risk of further export controls from the Biden administration, Taiwan because Trump said that the island might not have any more protection. Do you see Korea being better insulated or protected?
Well, not necessarily. I think that I'm sure if Trump is to win this election, he will probably charge huge defense fee to Korea as well. So we think that we got to look at it as the direction of the U.S. At this point in time. They will continue to put pressure on any countries that are having huge market share in any specific industries. But we think that having that kind of market share, that is positive news because we might pay higher, I guess, fees to U.S., but that industry itself will continue to flourish. So we think that we should look at those companies.
Daniel, really great to have you with us. Daniel, you're head of global asset allocation at Yuanta Securities. More ahead. This is the Asia Trade.
Taking a look at how FX is faring this morning in the early trade, we saw a gauge of dollar strength gaining for the first time in 3 days overnight. It was that move of Treasury yields edging a little bit higher. Today, you're seeing most of the action in the yen so far.
Well, we are just getting national CPI numbers out for Japan at the moment. For the month of June, we're getting 2.8% year on year for the national CPI reading. That is slightly shy of expectations of 2.9% and staying unchanged from the prior reading. When it comes to stripping out fresh food and energy costs, we're seeing it come in being in line with expectations at 2.2%, at a slight acceleration from that 2.1%. If you take out just fresh food, that number at 2.6%, an acceleration from the 2.5% in the previous previous month, but a little bit softer than expectations. We do expect bond yields when it comes to JGBs to extend the recent climb higher. That core CPI is seen to still be seeing that rising trend, given what we've seen from recent CPI readings and the Tokyo CPI reading, as well as those wage growth numbers as well. So we're hearing kind of an increasingly louder cohort of voices really talking about the reduction of debt buying from the BOJ, even if it isn't quite ready to raise rates again. We've been hearing from that former BOJ executive Hayakawa recently making these comments as well. We're also getting a pretty big JGB sale next week as well. It could be a bit of a challenging auction going into that Bank of Japan meeting, Bell. So a lot of this really depends on also what we're seeing with the yen. It's trading at 157 at the moment. You're getting kind of two schools of thought. Some modelling suggesting that we could see it crash through 165, and then we're also hearing, for some investors who see from here on more persistent strength in the yen thanks to that dollar weakness.
Yeah, it really comes down to the yield gap, really, because you've got the expectations that the Fed could cut as much as 50 basis points this year versus the BOJ that could be hiking by 40 basis points instead. So if you narrow that, it could portend the end of the yen's weakness, and that's the sort of case that our Bloomberg economics team is making. But here, off the back of those numbers, you're not seeing too much reaction. The question, of course, is whether that solidifies the next move for the BOJ with a hike. Shifting focus, because it's not just on Japan's economy facing these general malaise. It's also been China, and its third plenum has concluded with President Xi repeating his high-quality development mantra as the key focus for the economy. Leaders hope a move up the manufacturing value chain could help revive the nation's growth. Bloomberg Originals has been taking a closer look.
China is building a whole new economic engine, and it's a lot shinier than the last one.
我们正以高质量发展全面推进中国式现代化。
The prolonged slump of China's property market is dragging down consumer confidence and weighing on an economy already suffering from the effects of low productivity in heavy industry and cheap manufacturing. So, Beijing needs a replacement, and is focused on creating a high-tech, clean, lucrative, and sustainable one.
You're looking at creating new energy like solar panels or batteries, or building semiconductors, biopharmaceuticals. You're looking at AI.
This has not gone unnoticed.
Obviously, we're facing a very different geopolitical environment with all the tariffs talks being ramped up.
Protectionist salvos from the US and Europe may slow China's tech ascent, but they're also fueling Xi's push for self-sufficiency.
What the push for this economic transformation here in China means is that no longer is China's future going to be dependent on taking something the rest of the world made and producing it cheaper and quicker and reselling it to everybody else. What you're seeing now is that Chinese companies are at the forefront of bringing new products to market.
And subscribers can see that full documentary on the terminal or on Bloomberg.com. It'll also be on the Bloomberg Originals channel if you're watching on YouTube. Let's get some more analysis when it comes to the growth outlook and the policy outlook as we wrap up this third plenum. Joining us is Charlene Chu, who's a senior China Macrofinancial Analyst at Autonomous Research. Charlene, always great to have you with us. And of course, the expectations going into these meetings were so low, and as expected, it hasn't really delivered much in the way of policy deliverables. Do you expect some of the details and some of the support measures maybe to trickle out over the coming weeks?
So usually we do in the week after the plenum start to hear more details, but they also tend to be quite high level and strategic and not necessarily relevant to the current economic cycle. And what we've been telling people is that as it relates to what is going on right now and what we can expect in the next few quarters, we really should be looking more at the July Politburo meeting, which is usually at the end of the month. And that tends to be an economic focused meeting. And with the disappointing quarter on quarter and particularly GDP data for Q2 that just came out, there clearly is going to be pressure on them to be providing a bit more support for growth in the second half.
You've talked about the fact that, there hasn't certainly been a positive reset coming out of this in terms of extending to household or consumer confidence, right? How risky is that extra level of negativity, given that there already is that risk of, a confidence trap and disinflationary mindset perhaps setting in?
So that is one of our big takeaways from this whole plenum was, we were not really expecting anything to come out of it, but to see how much people were looking to this as potentially being a opportunity for the authorities to pivot and to reset policy. And the fact that there's really not been any significant signals of that, I think just is going to add to the malaise that we have already been seeing for quite some time. But even more recently, we've been seeing the consumer confidence index taking another downturn. We're back to the 2022 lockdown levels, which is pretty amazing. And we're also starting to see more headlines in China of layoffs and wage cuts. And so it looks like there's another wave of pressure here that's going to be coming on the consumer, which is not going to be helping. And to have the authorities not send any concrete signals out of this, I think, is disappointing for a lot of people, even though our expectations were that these type of meetings usually don't yield those kind of results.
And yeah, it seems like that sort of lack of balance that we have in China's economy could persist. Out of the plenum as well, it seems like China's going to be further reinforcing that need for exports to drive its economy. How reliable is that sort of approach, and how sustainable is it?
So it's worked this year. There's no question that exports and the associated industrial production related to that have been the bright spots when everything else still remains mired in a lot of problems. But I think this is really on a collision course in 2025, particularly if Trump is reelected U.S. president, just given how aggressive the overtones have been in terms of what they intend to do on China trade policy. And then even if we weren't to get another Trump 2.0 presidency, I think we are still starting to see signs of growing pushback in other countries to this idea that China can just manufacture as much as possible and send it everywhere else in the world. And obviously the EU and the tariffs on EVs that were announced a while ago is top of mind, but we've also seen emerging markets coming out with trade actions and a whole host of different goods. And our assumption is that is only going to intensify as the authorities try to open up other markets around the world as the developed markets become more reticent about taking in so much China output.
The property sector really scarcely had a mention. Do you see that as indicating where it sits in the government priorities, or what does it tell you?
It tells me that we are probably going to stay in status quo here in terms of it is going to be very unlikely that the authorities feel compelled anytime soon to do anything aggressive to solve the problems in the property sector. And without any type of big resolution packages, we just stay in this downward spiral of tight liquidity of developers, them not being able to finish units, people being afraid to buy primary market new homes, more focus on the secondary market, declining prices, more people listing homes. And, this is the trap we've been in for 3 years, and I don't see any sign that we're really moving out of that. There was some encouraging reheating in Tier 1 markets in June in the wake of what was announced in May, but we're already starting to see signs that some of that reheating is fading. For example, in Shanghai, sales of existing homes in the first 15 days of the month were down 20% month on month versus June. So we don't know if that is just an issue with summer vacations, or we are already starting to see some of that bounce fade in the Tier 1 markets.
Is there a sense of resignation by authorities? Because policymakers would have known that this is almost a necessary, bursting of the property bubble for years now, probably a couple of decades now. Do you think there's a level of comfort in terms of policies going to try and limit the downside for the economy, but not necessarily contribute to much actual growth?
Yeah, I think that's a very good way of putting it. And I think one of the critical issues here is despite all the property problems we've had, we have not had a financial crisis. They've managed to keep that element, which is usually comes hand in hand with a property crisis in other countries. They've managed to keep that on the back burner. And because of that, I think they do feel comfortable being pretty hands-off with this situation and trying to get the market to work things out without having to allocate a lot of money. But the problem is it will take a lot of time for the market to find a bottom without any type of intervention. And that's the situation we've been in now for 3 years.
That was Charlene Chu, the Senior China Macrofinancial Analyst at Autonomous Research. Thanks so much for joining us this evening, and we'll have more ahead on the Asia trade. This is Bloomberg.
Taking a look at how we're setting up for the open of cash markets at the top of the hour, just about 15 minutes away from major markets in Japan, Australia coming online, and Korea as well. We're watching, when it comes to Japan, a little bit of downside now showing across Singapore Nikkei futures. They're about 0.5% lower there. We are seeing a little bit more downside there for Australian stocks, over 1% indicated there in the futures session. Of course, that is a market, though, has been trading pretty close to record highs there. US stocks notched a second day of declines. These broader signs of economic weakness, of course, quite a bit of weakness continuing to play out across the tech, the mega caps and the chip-related sector, which were the leading sort of laggards in the Asian session yesterday as well. S&P futures are looking sort of just modestly positive there. We also saw small caps pulling back about 2% there as well, but futures are looking a little bit more modestly higher at this point, Belle.
Yeah, and also, Haidi, taking a look at one of the movers in after hours today, because Netflix has been actually sitting fairly flat. We did see it a bit higher at the outset of late trade, but it's kind of pulled back. It was very good second quarter numbers for the company. People are a little bit concerned about the outlook that the company gave instead. But Bloomberg Intelligence says the subscriber gains cements the company as the undisputed streaming leader. Senior media industry analyst Geeta Ranganathan joins us now. And Geeta, that's exactly it. I mean, it had very good second quarter subscriber numbers. It was just that concern around what they signaled.
Yeah, absolutely. So you're absolutely right in terms of the subscriber numbers came in really strong, and there was really nothing that not to like in the second quarter report, other than the fact that the third quarter revenue guidance did come in slightly lighter than what the street was expecting. I think the street was expecting about 15% revenue growth in the third quarter. Netflix is guiding to about 13.9%. And I think that was cause for some concern. But as we listen to the earnings call, it's very, very clear that all of the momentum drivers are very much in place. So from a fundamental perspective, from a financial perspective, from a competitive perspective, I think Netflix is in the best shape that it's ever been.
What about ongoing, Geeta? Are there any risks to this outlook?
So the risks definitely are in the fact as to how to model the company. So I think as investors are still kind of grappling with this, because we're seeing them report some of their strongest subscriber metrics ever, in so many years now. So just between 1Q and 2Q, so in the first half of this year, they've already had close to about 17, 18 million new subscriber additions. That puts them on pace for a record growth year in 2024. But remember, they have said that starting 2025, they're going to stop disclosing subscriber metrics altogether. They're going to stop disclosing average revenue per member. And so then the puts and takes kind of become a little bit harder to model out. They are going to give us some revenue growth numbers, but it's going to become, I think, really hard to kind of parse out, how much of that is going to come from new subscriber gains as opposed to maybe just price increases or adding on new tiers or advertising.
What about the slate for content? What do we learn about that so far? Because it seems like a lot of analysts were, I mean, Bridgerton, for instance, has been a bit of a runaway success. Is there anything else that stands out to you there?
Yeah, so they did talk about their content, and you're absolutely right, Annabelle. Their content by far is the leader when it comes to all of the streaming services out there. So Bridgerton is not only Netflix's most watched show, it is the most watched original show across the world in the second quarter, streamed over 1 billion hours streamed just in the second quarter alone. So it's performed extremely well for them. But it wasn't just Bridgerton. It was, you know, the breadth and the depth of the content slate that they have is truly inspiring, because they mentioned so many content titles from Asia. And this was a quarter where actually the Asia Pac region performed really well. And they spoke to a lot of those content titles doing really well. You know, India, for instance, was a country that they did bring up. And they said that, you know, this breadth of content, especially with a lot of local content titles, is really helping kind of drive that subscriber momentum. And looking forward, I think one of the things that, you know, investors are going to be focused on is the investments that they're making in new genres of programming. So live sports is something that they're getting into in a big way. They have WWE content that is going to be coming on board starting in 2025. That's all across the world. And then a little bit later this year in the US, they're going to have NFL games. And that's going to be a really big draw, I think, for the US market. Those are 2 Christmas Day games. Apart from that, they do have a live boxing match with Mike Tyson and Jake Paul, and there's a lot of anticipation and buzz building around that. So they are kind of venturing into new genres, I think, which is going to help them with subscribers as well as to build that ad business.
And where do you see them being able to add more subscribers? Do we get any sort of indication on the focus areas like India, for instance?
They definitely did mention India. And remember, last quarter, what we had seen was that Asia Pac was a little bit weak. So we actually saw surprising strength last quarter in the U.S. market. This quarter, we actually saw the U.S. market slow down a little bit, but the Asia market was actually fairly strong. So Asia, Europe, as well as LATAM all performed relatively well compared to expectations. And that's where we're going to see a lot of the growth come from, because the U.S. market at this point is pretty saturated with over 80 million subscribers. But, you know, Asia is relatively under-penetrated, maybe only about 20 to 25% penetration. So there's still a lot of room for upside. And they did speak to, you know, the Indian market as being, as providing them with a lot of potential for future growth.
That was our senior media analyst for Bloomberg Intelligence there, Geeta Ranganathan, speaking to us as Netflix comes in late trade at blockbuster second quarter subscription figures. We'll have more ahead on the Asia trade. This is Bloomberg. Blackstone President Jonathan Gray has become the latest Democratic donor to urge President Biden to reconsider his election bid. Gray told us the 81-year-old should weigh the intense physical demands of running the country for another 4 years.
The president is a good man. He has been a wonderful public servant. And like Speaker Pelosi said, you know, he's gotten the votes in the Democratic primary. This is his decision. But I would hope he considers the really extreme physical toll of this business, of this job, I should say, over the next 4.5 years. And so, again, his call, but it is a very challenging physical job.
Are you looking to support Kamala Harris instead?
You know, I'm going to wait and see what happens here on the Democratic side. I am a Democrat, but I'm going to let the process play out.
If Trump were to take the office after the November election, what would be the biggest change you think to the economy and markets?
Well, I think there would be a couple of them. Regulatory change could be pretty significant, particularly in the area of M&A and antitrust, which has made deal making a bit more challenging. I think on the energy side, the approach towards hydrocarbons and drilling would change pretty significantly. I still think renewables are a key part of the mix. We've got a real need for power. If you think about it in this country, power demand the last decade or so has been flat. It's now projected to be up 40% Part of that is digital infrastructure. Part of that is this manufacturing resurgence that we've seen. So I think we'll see a change in energy policy. And then you talked about it. We could see a different environment for tariffs.
You know, if you think about the election cycle and what we have seen so far, do you have any concerns as a business leader about unrest in this country?
You know, I have a lot of confidence in this country. We have an incredible Madisonian system. We have so many patriotic people who are Republicans or independents or Democrats. I think most people want to see economic prosperity, want their children to have better lives, want the country to be safe and secure, there to be freedoms. I really believe ultimately, even though there's a lot more friction, social media, I think makes it tougher. I actually think people's goals are similar, and I think we'll find a way to get through this. The events of the last couple of weeks, particularly the assassination attempt, was very disturbing. There's no place for that in our country. And I really think we'll find a way to move forward. I have a lot of confidence in this country, and I know our firm does as well.
Blackstone President and Democratic donor Jonathan Gray there speaking with Bloomberg's Shonali Barsak. And of course, we were speaking to Jody a little bit earlier, Belle, and talking about it's hard to believe that that assassination attempt was actually just a few days ago. And we've not heard a great deal from the former President Donald Trump since then. And in fact, so much of the focus has been on the pressure on the current President Joe Biden and these sort of increasing efforts to try and have him consider stepping down as the presidential nominee. But we will be hearing from Donald Trump, set to speak at the culmination of the Republican National Convention as he formally accepts that nomination.
Yeah, actually, Haidi, we've got a T-Live underway, and we're hearing or understanding that Trump has actually just entered the arena to AC/DC's Back in Black. It's apparently blaring over the speakers there, so the energy must be quite high at this point in time. But yes, that question of what he's going to say, that first public speech there, you can see the visuals against the backdrop of really, as you said, President Biden really fighting for that chance to stay in the campaign. We're going to have special coverage from this event for the next few hours as well.
That is it for the Asia trade as US politics stays firmly at the centre of all our attention. Do stay with us, though. Our special coverage, as Belle mentioned, of the Republican National Convention. We'll be hearing shortly from the former President Donald Trump. This is Bloomberg.